Minimizing capital gains taxes on your retirement portfolio is a crucial strategy for preserving wealth, especially when you're getting closer to retirement. Capital gains taxes can take a big chunk out of your returns, which means your portfolio could be growing less than you'd expect. But here's the thing. There are legal and effective ways to reduce the impact of these taxes, and you're about to learn exactly how. Now, before we dive in, I want to remind you, if you're serious about protecting your wealth, especially if you have $100,000 or more in your IRA, 401k, or even upwards of $5 million in savings, I strongly recommend clicking the first link in the description below. Thousands of Americans are opening gold IRAs right now to shield their wealth from taxes, inflation, and volatility. I'll explain why later, but first, let's tackle these taxes. One of the easiest ways to minimize capital gains taxes is by utilizing tax-advantaged accounts like IRAs and 401ks. These retirement accounts allow your investments to grow tax-deferred. What does that mean? It means you won't owe taxes on capital gains until you start taking distributions. This strategy alone can significantly reduce your tax bill because you're not paying taxes annually on gains as you would with taxable brokerage accounts. But here's a pro tip. One of the most overlooked strategies for tax minimization is tax-efficient investing. By focusing on investments that don't generate a lot of taxable income, like index funds or certain municipal bonds, you can keep your capital gains taxes low. While many people focus solely on the returns, it's just as important to consider how much you're going to lose to taxes when selling those investments. When it comes to minimizing capital gains taxes, it's all about smart investing. Another key strategy is asset location. This means placing your investments in the right accounts. For example, putting your most tax-inefficient investments, like dividend-paying stocks, in tax-deferred accounts, like your IRA, while leaving tax-efficient investments, such as index funds, in your taxable brokerage accounts, will ensure that you're not getting hit with unnecessary taxes. And if you're planning on passing down your wealth, consider the step-up in basis rule. This allows your beneficiaries to avoid paying capital gains taxes on the appreciated value of assets when they inherit them. Instead of paying taxes on the difference between your original purchase price and the sale price, they only pay taxes based on the asset's value at the time of inheritance. This can be a game changer, especially for retirees who are planning their estate. But here's the thing. None of these strategies will matter if your portfolio is exposed to the wrong kinds of risks. The stock market is volatile, and taxes are always changing. So it's important to have a diversified portfolio that's designed not just for growth, but for protection. This is where gold IRAs come in. Unlike traditional stocks or bonds, gold has historically been a hedge against inflation and market downturns. And because gold is a tangible asset, it doesn't face the same tax burdens as other investments. When you invest in a gold IRA, you're protecting your wealth while potentially lowering your exposure to high taxes and market risks. It's one of the best ways to safeguard your retirement savings. For those of you watching who are already retired or nearing retirement, consider this. If you're not already utilizing a gold IRA, you could be missing out on a valuable opportunity to reduce your tax burden and protect your wealth. If you're serious about protecting your wealth in the next 2 weeks, it's worth looking into opening a gold IRA. So, as you can see, the key to minimizing capital gains taxes isn't just about tax deferrals or efficient investing. It's about making sure your assets are working in your favor, not against you. Gold IRAs provide a stable, tax-advantageous way to grow your wealth over time. If you want to learn more about how a gold IRA can fit into your retirement strategy and why thousands of Americans are turning to this solution, make sure to click the link in the description for your free guide. This is a strategy that's perfect for American retirees who have $100K or more in their IRA or 401k, or even those with 5M plus in savings. Protecting your wealth from taxes and market volatility is easier than you think, and a gold IRA could be the key you've been looking for. Don't wait, take action today.